o'clock. Let's get started. Welcome everyone. I'm Nick Grant, President and CEO of inTEST Corporation. Thank you for your interest in the company. Excited to share with you the journey we've been on. I joined the company back in 2020, right in the throes of COVID. Really brought in as the first external CEO to the company to help transform the business. And we will reference some forward-looking statements and non-GAAP financial measures in the deck and materials today. So please reference this and the website for additional information. And as I said, I was brought in to help unlock the potential, transform this company. inTEST has been around since the early 80s, started in the back-end semi tests, primarily in the analog mixed signal space of back-end semi. And went public in '97, did some small acquisitions after going public, and started to build up a thermal business, test chambers, and some induction heating systems that they acquired, and really was moving towards the thermal side of the business, and kind of neglecting the semi-bit business when I came in 2020. And we've reinvested back into semi, growing that business through innovation, through some channel and front-end investments to really recapture some lost opportunities we had over there, and then have aggressively gone after diversifying the company into non-semi markets, specifically automotive, aerospace, defense, and life science areas for us. And we restructured the company around 3 technology divisions, which I'll touch on more in a few minutes. And we launched a strategy, 5-point strategy for the organization to really propel us with a vision and mission going forward. So the transformation is really around shifting to these diversified markets I mentioned, ones that we believe have strong longer-term secular tailwinds for us. We've increased our service addressable market substantially, both organically targeting some adjacent spaces with new products, as well as the acquisitions, and reorganizing the company, helping to drive greater collaboration and really moving this business to a more performance-driven type organization, and higher focus on M&A to expand and accelerate growth for us. So we've made some really great progress. One thing you'll know is we are an engineering technology company. We really don't have off-the-shelf type solutions. We develop technology and solutions for customers that then we can sell to a wide variety of other targeted customers that could use those similar type applications. Primary markets, semi, industrial, automotive, defense, aero. And you can see some of our blue chip customer base there. Trailing 12-month revenue was around $122 million. This is up from less than $55 million when I took over in 2020. And we are a global market with sales around the globe there. Primarily manufacturing in North America, and with our latest acquisition in Europe, just outside Milan in Italy. So we launched a 5-point strategy to really focus our growth efforts across our businesses that we had here. And I'd say nothing revolutionary, but really targeted initiatives around global and market expansion. How do we fix that front end? How do we optimize reaching customers? How do we identify adjacent markets we want to go after? And how do we go deeper into key customers and get a greater share of their wallet? Other strategy for us is innovation. This is something near and dear to my heart, and something I've been driving throughout my career, creating new product roadmaps across our businesses that have innovative technology solutions that keep us ahead of the competition, but also open up these targeted market opportunities, as well as driving more standardized type sub-assemblies that we could leverage to drive cost out. Then focusing on service and support, taking the businesses, customer base, and making sure we're getting the most out of the solutions we're providing and helping them to optimize their productions, making sure they're a customer for life, expanding our solutions here, service agreements, remote monitoring, asset health, et cetera, to provide greater services to our customers. The next strategy is one I've spent quite a bit of time and effort on over the last 4 years. This is the talent and culture. This is changing this family kind of run business that went public, stayed with the CEO, stayed in the role, and then the individuals succeeded him as the CEO also within the organization, so kept the same culture of conservative, risk-averse. I came in and really performance-driven, results-oriented, driving performance management solutions to align objectives with compensation and moving the organization where we wanted to go. The company responded extremely well. I have brought in really top-notch talent on my team. The entire executive team has been restructured, and everyone's aligned on what we're trying to accomplish here. And then the last strategy for us is M&A, and really complementing our organic expansion opportunities with technology, geographic plays that would allow us to broaden our customer base and strengthen footprints in target markets. Speaking of M&A, we successfully acquired a company called Alphamation in March of this year. That's our most recent. We had done two other companies in a product line back in 2021. And this company, it really enhances our electronic test capabilities. They're doing infotainment testing, dashboard testing, lighting, onboard computing systems for the automotive industry, primarily some consumer electronics, but primarily automotive. This is one of our targeted markets. Back in 2021, we acquired a company that's doing integrated circuit testing as well as electric vehicle battery testing that strengthen our footprint in the automotive industry. So the automation around their systems and the automation around our other testing solutions, really aligns extremely well, and we can capture some synergies and share even some of the technology that's acquired with this business. So great business on a nice growth trajectory, and one that we really sees as a good fit for us, not only culturally as an innovative and engineering company like we are, but expanding our footprint in Europe. There are roughly 130 employees just outside Milan, and really a great fit for us. And then giving us stronger footprint in automotive, as well as this best-in-class engineering talent that I spoke about. And this aligns with our diversification initiatives that we laid out. inTEST, historically being predominantly semi, was over 2/3 semi when I started in 2020. We've now, semi has grown over the last 4 years, but we've grown the other markets more rapidly as well, organically as well as through acquisitions. So semi today will be around 45% of our sales, 45% on that. So part of that is also we had some headwinds in semi, in our back-end semi market doing its normal cycle. We're kind of at the coming out of the trough here with our back-end segment, although our front-end business serving silicon carbide, gallium nitride is kind of just entering into the trough out there, predominantly driven by the automotive markets. So quickly on our three technology divisions, electronic test. This is where our back-end semi-test solutions, the heritage of the company, resides, along with the integrated circuit testing, which provided diversification outside of semi, and then now the Alphamation infotainment dashboard testing solutions for the automotive industry. And really a nice fit, seeing some great synergies across all three businesses there in our electronic test division. Environmental Technologies division today is very much thermal focused. This is where our thermal systems that include the chambers, temperature chambers, process chillers, and as well as some temperature freezers that we have acquired out there resides. And we look to expand beyond thermal for this environmental segment, moving into humidity, vibration, acoustic testing, et cetera, to broaden our portfolio for our customers. Process Technologies is our last division here. This is where our induction heating, as well as thermal image, as well as video imaging camera business resides. And both of these serving a wide variety of markets out there. Anywhere there's a weld, a braze, a furnace, that's being done today with gas. Our induction heating can do it in a much more greener way and higher robust controls across the systems there. So we're constantly displacing older technology with this induction heating solution. It's also where our silicon carbide, gallium nitride subsystems that we provide to growth chambers as epitaxy systems resides. Our induction heating provides the temperature control as these crystals grow, and as well as the applications for what the epitaxy layers are deposited in that. So, and then we acquired a business in the camera, expanding our imaging solutions here to provide some visibility around the processes, as well as entering and just adjacent spaces like life sciences, where they do ophthalmic inspection and some robotic surgery applications with their cameras. And M&A is, as I mentioned, one of our 5 strategies, but really something I've done throughout my career at Emerson and Amatech, and now here at inTEST. And really trying to drive and make this a competency for us, a core competency, where the business is constantly looking to complement its portfolio of solutions for our customers. And the team's responding extremely well, and pleased with the deals that we've gotten done so far. And we will continue to drive and build up these divisions through M&A and targeting, again, applications that complement us in electronic test, vibration, humidity, stress testing, et cetera, in the environmental space, as well as the process technologies, moving to higher and lower frequencies in our RF capabilities, and strengthening geographic positions out there. So with that, let me turn it over to Duncan Gilmore to walk you through the financials.
Thank you, Nick. Great to see a full house here in Boca this afternoon. So financials, I'll just hit the high points here. I don't think we have a huge amount of time. Focusing on our most recently completed quarter, Q3. So in Q3, our orders were up 4.5% year over year. That does include fairly solid softness in our semi market. We did get a nice pickup from the Alfamation acquisition, and Nick was talking about 3.9 million of orders, in Q3 coming from the acquisition. A lot of our other markets outside of semi, moving along, fairly well. Defense aero in particular, was up 1.4 million, 47%. We also saw sequential order growth, so sequentially, and we did have a full quarter of Alfamation in Q2, so it was nice to see that 7.1% sequential order growth. From a backlog perspective, our backlog year over year up 5 million. That does include backlog from our Alfamation acquisition of about 15 million, so apples to apples, that backlog is down. Again, our semi business really being the contributor to that situation. From a revenue perspective, in Q3, our revenues were down a little bit from Q2 at just over 30 million. That included 5.4 million from the Alfamation business. That 30 million year over year was a 7 million drop in our semi sales. So you can get a perspective of the impact of the semi softness on our numbers. But again, the other markets, industrial was up nicely, and across many of the other markets served, we saw decent growth, and we continue to drive diversification, as Nick has flagged. Sequentially, revenue was down a little bit, but we did have a couple of $1 million of shipments, which literally missed the cutoff by a couple of days. So we weren't overly concerned with that, and we did have particularly high Alfamation shipments in Q2. Unusually high for that business at just under 10 million. How does that translate into gross profit and margin? I mean, the biggest highlight was that in Q3, the margin popped back up nicely to 46% after a much lower number in Q2. That high Alphamation number I talked about of just under 10 million, the margins there were a little softer, did drive that down to the 40.6%. In Q3, our mix was a lot better, a lot more consistent with what we've seen historically, and we saw that come through in the 46.3% margin, which was similar to our position kind of year over year. Operating expenses in Q3, year over year, operating expenses were up 1.5 million. That does include just over 2 million attributable to the operating expenses of the new business. So again, on an apples to apples basis, we did actually take some cost out of the business kind of year over year and seeing the benefit of that. On a sequential basis, effectively, our operating expenses were effectively flat. So from a profitability standpoint, really what we saw was that improved margin helping the bottom line in Q3 versus Q2. Those softer revenues driven by the softness in semi, you're driving those lower profitability numbers in Q2 and Q3 versus where we were, in the prior year. Columns on the left representing EPS and adjusted EPS. The only adjustment to EPS for adjusted EPS is adding back tax-affected intangible amortization. On the right-hand side, the chart showing net income and adjusted EBITDA. We add back stock compensation to adjusted EBITDA. From a balance sheet perspective, Q3, we did generate over $4 million in cash from operations. See on the table on the right-hand side, CapEx is relatively modest in our business. The $500,000 was actually relatively high in terms of a quarterly CapEx number, but just under $4 million of free cash flow generation. We did pay down over $5 million of debt during the quarter and ended the quarter with just over $16 million of total debt and around $18 million of cash. So slightly net cash positive at the end of the quarter. We do have $30 million available to us under an acquisition funding facility for future M&A activities, although we don't want to over leverage the company, so we do keep a close eye on that. In terms of capital allocation priorities, organic growth and inorganic growth are really what we're trying to drive over the course of the next kind of number of years. Focusing on organic growth is our kind of short-term priority. We'll continue to reduce debt and pay down debt under the terms of our existing debt arrangements. M&A is important for us, and then we'll also opportunistically look at return of capital if the capital's there. From a guidance perspective, fourth quarter guidance is to fall between 34 to 37 million top line. Margin drops back a little bit based on projected mix to around 42%. Operating expenses consistent really with where we've been running. We're looking at EPS of around 8 cents on a GAAP basis, 14% on an adjusted EPS basis. Full year, that translates into 128 to 131 million top line with the margin percentages and spending numbers kind of listed on the slide there. With that, I'll hand it back over to Nick to close it down. Thank you.
Thanks, Duncan. So team's executing well on our strategy over the 4 years here. We are facing a few headwinds, but seeing some gradual improvement out there. And as Duncan highlighted, still seeing growth opportunities in the defense aero and other markets that we've targeted out there. We continue to optimize our go-to-market with our sales direct heads that we have, as well as channel partners that we've developed, and in the regions where we are not present out there. And this will continue to pay off for us. And really focusing the businesses on innovation and continuing to drive new product development is a key to our future growth here organically. And we will obviously continue to right size and capture costs as end market conditions require. So the teams are doing a great job with that, and I believe we're moving this company forward in a big way. So with that, we have about 5 minutes left to open it up for Q&A.
Yeah, so I wanted to ask about the acquisition strategy, about some of those complementary, offerings that you guys are going to be going after. Is there any pipeline or area that looks strong?
So the M&A strategy we have is really a bottoms-up strategy. So the businesses and the division leaders are all identified targets, working with these owners of these companies, trying to build the relationships. So we constantly have activity across the entire group. With that said, I would say our electronic test business is kind of integrating the Alphamation deal that we just completed here in March. So their focus and management efforts are around integration. Our process technology is where we've seen that front end semi kind of slow down around silicon carbide, gallium nitride. So they've been more focused on right sizing. So our environmental technologies business or division there is where I'd say most of the activity we're seeing right now is playing. So, yeah.
I might just piggyback off of that. In terms of M&A strategy, what kind of geographies are you focused on? I know you guys are kind of broad in how you have it, but is there really one in more particular that you guys maybe looking at?
Yeah, I would say our primary focus has been, because we are predominantly North American manufacturing, was to strengthen our position in Europe. So Europe is one of our targeted areas. And then what we've done for Asia is we launched an investment in Malaysia, a dedicated facility that shared for our businesses that will be both engineering and manufacturing to better serve the Asian market rather than M&A over there. So U.S., Europe is primary and market focus. Now you had a question? Yeah?
It's sort of related as it relates to the battery, the EV side of it. Society of Automotive Engineers not that long ago came up with their EV OBD standards, which is specific towards the battery side of it. Are you involved in any way with complying with that new SEE standard for the testing, the diagnostics as it relates to the batteries?
Our team is pretty integrated with the in-market manufacturers in that space, so I would assume so. I can't honestly tell you for sure. I personally haven't been involved, but I would assume that they are aligning with those test requirements associated with the new standards that are coming out there. I mean, we're dealing with the battery manufacturers, the OEMs in that space, and if they're mandating those kind of requirements, our system will align on that side of it. And I can tell you, as EV markets have kind of slowed, our battery test equipment has found other applications. Drone batteries, we've developed solutions for those. Industrial robotic batteries, and a wide variety of different battery applications outside of automotive as well. So we're looking to continue that diversification across our group. Other questions? Yeah?
You have that crystal ball in 1 minute. Fast forward, let's say 3 years. What does the pie look like? So for, let's say, 130 now, where do we?
Whoa.
That's the end of that.
I guess is this how they end these sessions? Is this?
But,
Yeah.
Maybe speaking just to the kind of as you see mix, obviously you could have some acquisitions in that, but just what your margin profile would look like.
Yeah, no, so we've laid out our strategies. Really, we want to get this business above 200 million. As a public company, we need to be in that kind of range. And that'll be both organic and inorganic growth. With that kind of the margin profile, you want to touch on that since you don't want to?
Yeah, I mean, I think we've talked before about getting our business to consistently delivering 15% EBITDA, 20% our business operating income level, and about 10% bottom line, give or take, where we are with intangible amortization, depending on the cycle with M&A activity. Our business has delivered those kind of numbers in certain quarters, so we know we have the capability as a business to do it. Obviously, the last couple of quarters with semi being the softest being, we haven't been there. We've still been profitable, we've still been generating cash, but those are the kind of metrics where we want to get ourselves to as we're bigger and consistently delivering. That's what we're striving to get to.
With more than 6,000 small and micro cap companies listed, if you're looking for the next Apple, then Channel Check truly is your choice. It's an investor community where you can can access independent Wall Street research, advanced market data, balanced news, corporate videos, and podcasts. You can even register to attend in-person Meet the Management Series luncheons and to be part of the preeminent annual Small and Microcap Investor Conference, NobleCon. And here's the best news. Since Channel Check is sponsored by the featured companies, premium membership requires no investment. It's absolutely free. So check it out. Log in today. Find out why Channel Check is North America's leading source of research on the companies that just may change the world.